Good evening, everybody. Johnny Seville here from Acorn Wealth Corp. This is your executive summary for the stock setups for the 15th, I should say, of September. Well, things have continued to move in the negative bias we've been discussing for the last few days. Market rallied up right to its 5-day exponential moving average today. Hit that right on the nub and closed at the bottom of the range. So really what we're looking for here is a break below 2120 and trouble is brewing. Of course, we still have 1 day left of open range and then we reset on Friday. So we'll be all looking to see what happens tomorrow. What I'd really like to see, of course, is the open range of Friday to set a bearish close and kind of fill this resistance or break this resistance and set a bearish close after breaking through that 2120. Either way, we want kind of the open range to be right underneath resistance, allowing the support, well, basically all the room beneath it to then be filled and gather momentum then to the downside. So just a quick one tonight, not a whole lot of new positions. We've got a lot of really awesome positions going on at the moment. Everything was moving perfectly today. The shorts have been killing it. I mean, of course, TJ, I think it was TJX. This one went straight into its second target today. So that one's awesome. That one's now hit the second target and closed. The main things that I wanted to talk about, though, was looking at HYG, I should say, the high-yield bonds. Now, high-yield bonds, of course, is the risk-on investment for smart money. When they believe that corporate America is doing great, people buy high-yield bonds, corporate high-yield bonds. And so you'd expect this to be going up if the market was healthy. What you can see here is the market has been unhealthy, and the high-yield bonds have actually, in fact, been forming a rising wedge formation, which has been breaking down. So this indicates that high-yield bonds should drop from where we're currently at where we broke down from 86.50 all the way down to where this 200-day moving average is at 82.50. That's a significant drop, and that would bring us back down to where we started at in June. If we have a little look back to where we were in February, this is kind of the longer-term potential if the market continues to break down from that point. So high-yield bonds in trouble. That basically says to us that smart money isn't interested in supporting high-yield bonds in America, therefore lack of confidence in corporate America itself. So risk off at the moment is where smart money is going. So corporate high-yield bonds are on the downside, and that indicates further weakness from the market. And of course, if the S&P breaks that support level with these two things combined, it means trouble. But it also means great profit for all of these shorts that we've been talking about recently, which have been doing great. AVAV, for example, these are the December $25 puts that we discussed. These are now in 85% profit. 84% profit. I would update the stop loss here to 24.43. Actually 24.47. Actually, just a little bit above that 9-day moving average, giving that some protection. This one's just continuing to drop. This one could be awesome because that's just breaking through now. And again, profits are up huge on this one. UVXY, talked about this one last night, about this one still being a valid trade. The March $25 calls, again, which we discussed in the last executive summary, now up again 42% higher. To $11.21. Now the UVXY March $25 calls. That's March 2018. March 2017. And also TBT, the high yield bond ultra short, or I should say the 20-year Treasury bond ultra short. These now are in 215% profit. So really, really moving. Those are the 2018 $35 calls on TBT. Also, one little lost leader. I don't know if many of the newer members would be familiar with this, but this is one we've been following for quite a while, and we had talked about the January 2017 $30 calls on SRPT, which had a monster rally today, breaking through all these resistance levels. 26.76% gain on 16 million shares over an average of about 1 to 2 million, and that was a huge move. SRPT now up to $11.61 on those January $30 calls, January 2017 $30 calls, which is a 93.5% gain on the options. So things are looking really, really good. I'm really, really happy with the way everything's moving. One stock that I do have on my watch list, other than the ones we've discussed already, ZBRA, Zebra Technologies. This one's now starting to look good as a momentum play to the downside. So we'll be keeping our eye on this, but as you can see, lovely movement right up the moving averages, and this one just curling over now, looking like it's going to drop back down. If you were looking for a new trade, and some of the ones we've already discussed, you'd missed or weren't your appetite, this one's starting to look pretty good. I'd be looking for a break of 65, and I'd be using the moving average at 68.57 as a stop criteria. So basically, there's about let's think here, what was it? $3. So say $3.60 as a resistance zone, and this one could come all the way back down essentially to the lows here around 47. Use this low, 49.39. So down to 49.39 would be the way that I would target that. So that's pretty good. That's essentially a $3.60 risk for a $15, almost $16 potential reward. So 5 to 1 risk reward ratio there. And again, those moving averages are posing a threat, but by that point we should be able to reduce the stop loss down to protect that entry point if that does occur. So that would be the only one that I would add to that list. There's a lot of great plays going, so we'll discuss those in depth tomorrow night in Trading Room. And of course, for those of you who are part of our mastermind group, we'll be meeting with you tomorrow 2 p.m. online as well to go a bit deeper. So I look forward to seeing you all either way in Trading Room or Mastermind or both. Happy trading and good night.